All right, ready for a deep dive?
Always.
Today, we're diving into the world of Indian railways.
Oh, interesting.
But hold on, we're not talking about train schedules or those new high-speed routes.
Heard.
We're going behind the scenes,
Behind the scenes.
yeah, to the financial powerhouse that keeps those trains running. The
Ah,
Indian Railway Finance Corporation Limited, or IRFC.
IRFC. Yeah.
You might be thinking, finance?
Yeah, a little dry, maybe.
Right, sounds dry.
Hmm.
But trust me, this is way more interesting than it sounds.
I believe you.
Because really, we talk about infrastructure,
Mm-hmm.
but we rarely think about how these huge projects get the money, you know?
The funding. Yeah, that's key.
And that's where IRFC comes in. They're basically the bank of the Indian Railways.
The bank.
Huh. They provide the cash for everything from laying new tracks to, like, buying those shiny new engines.
Makes sense.
And you've got some interesting documents for us, right?
I do, straight from IRFC.
Official press releases and financial statements.
Yeah.
All for the third quarter.
Yep.
Fiscal year 2024-2025.
Ending December 31st, 2024.
So that's right.
It's like we're peeking into their financial diary.
Exactly.
So before we get into the nitty-gritty, give us the quick overview of IRFC.
Sure.
What do they actually do? Why should we care?
Okay, so IRFC is a mini Ratna public sector enterprise.
Mini Ratna.
Yeah, it means they're kind of a big deal in the Indian economy.
Okay.
Think of them as this, like, specialized financial institution
Mm-hmm.
with one main client, Indian Railways.
Okay.
They raise funds and then they lend that money to the railways.
To develop the network. Right.
Exactly, to develop and maintain that huge rail network that India has.
So not your typical bank
No, not at all.
where people put their savings.
Nope, IRFC doesn't take deposits from the public.
Interesting.
They raise money by issuing bonds.
Bonds.
Yeah, and other financial instruments.
Yeah.
And being this non-deposit taking NBFC,
NBFC.
this stands for non-banking financial company,
Got it.
and being an infrastructure financing company.
That's crucial to understand their role, how they operate.
But why should we be interested in their financials if we're not, investors?
Good question.
How does this affect us every day, folks?
Well, a healthy IRFC
Mm-hmm.
means a better railway system for everyone.
Okay.
It could mean smoother journeys, maybe newer trains,
Oh, nice.
even potentially lower ticket prices down the line.
I like the sound of that.
Their performance really impacts the whole economy,
Okay, so it's bigger than just numbers on a spreadsheet.
It is.
Let's dive into those numbers.
Let's do it.
The press release highlights their profit after tax,
TD.
right, PAT, for
Hmm.
Q3, and it's up almost 2% year on year.
Not bad.
They mentioned 9-month PD is also up,
Uh-huh.
and total income for both periods saw growth too.
Steady growth.
It's steady, but not a huge jump.
Right.
What's your take on that? Is that normal for a company like this?
Well, you got to remember, infrastructure financing, it's a long game.
Long game.
Yeah, unlike those tech startups aiming for, like, rapid growth.
Right.
IRFC invests in projects that last for decades.
Wow.
So their growth is usually more stable, less prone to big, sudden changes.
Makes sense.
Plus, we have to factor in the current economic climate.
That's true.
India's economy is growing, yeah, but there are those global factors,
Little factors, yeah.
like inflation, potential slowdowns, that can really mess with investment and returns.
Right, so it's not as simple as just looking at one number in isolation.
Exactly.
Now, one number that really stood out to me
Oh, yeah.
was their assets under management, or AUM.
Yeah.
They're managing over 4.61 lakh crore.
That's a lot of curves.
That's a lot of money.
Hmm.
To put that in perspective, we're talking like multiple airports or hundreds of kilometers of high-speed rail. This scale is massive, especially for India,
It is.
with its infrastructure needs. What's your perspective on that number?
Well, it shows just how big IRFC's operations are and how important they are to the Indian economy. They're not just financing a few lines here and there.
Right.
They're funding the backbone of the nation's transportation network.
Huge responsibility.
It is. Comes with a lot of pressure to perform and manage all those assets well.
Absolutely. It's not just about having the money. It's about using it wisely.
You got it.
And speaking of strategy, the chairman and managing director mentioned diversifying their lending.
Diversifying. Interesting.
Yeah, in the press release. It seems like they're looking beyond just traditional railway projects.
That's right, they are. Diversification is key for any financial institution, especially one as big as IRFC.
Why is that?
Well, They don't want to put all their eggs in one basket.
Makes sense.
They want to spread the risk by investing in sectors that are related to the railways, but not totally reliant on them.
Okay, so it's like a safety net.
Exactly.
And they're not just picking random new areas.
Yeah.
They're now the L1 bidder,
L1.
the lowest bidder likely to win for financing a coal block development project.
Goal.
Yeah, in Jharkhand, it's a 3,167 crore project.
That's a big one.
But isn't coal a bit risky with the world shifting to renewable energy?
That's a fair point. But coal is still a major energy source for India, especially for the railways.
Okay.
By investing in coal, IRFC is ensuring a steady and potentially cheaper fuel supply.
So it helps their main client.
Exactly. It helps manage operating costs for the railways, keep things running smoothly. It's a calculated move, shows they understand the current energy situation in India.
So they're playing the long game here, balancing the need to diversify with the realities on the ground.
Exactly.
I also noticed a new lease agreement with NTPC for railway wagons.
Ah, yes.
It seems they're going beyond just funding tracks and engines.
That's another example of their diversification strategy.
Right.
By owning and leasing wagons, IRFC is creating a new income stream that's not just reliant on loan repayments.
Just like another safety net.
It helps stabilize their revenue, provides a buffer if things fluctuate in the railway sector.
Good for them, and potentially good for the whole system's stability.
Exactly.
Now let's talk funding. Keeping those trains moving and building new ones takes a lot of cash. The press release mentions zero coupon bonds.
Zero coupon.
And capital gain tax exemption bonds, or 54 EC bonds. These sound complicated.
They do a bit.
Can you break them down for us? Like, explain it so even I can understand it.
Loves. Okay. Imagine you buy a gift certificate at a discount.
Okay.
You pay less now, but you get the full value later. That's basically a zero coupon bond.
So IRFC issues these bonds at a lower price.
Yeah, lower than their face value.
Okay.
And they repay the full amount when the bond matures.
Got it.
Investors profit from that price difference.
So it's like betting on IRFC's long-term value.
Exactly.
What about those 54 EC bonds? What's special about them?
Those come with tax benefits for investors.
Tax benefits, nice.
So they can reduce their tax liability by investing.
Oh, it's attractive compared to other options.
Exactly. And by offering these tax incentives, IRFC can attract more investors and potentially get funding at lower interest rates.
A win-win.
Exactly, for both sides.
So it's like they're playing financial chess, making strategic moves.
They are.
To get the cheapest funding possible to keep those trains rolling.
That's a good way to put it.
But how do we know if these moves are working? How healthy is IRFC financially?
That's where the financial statements really come in. They give us a much more detailed picture.
More detailed than just the press releases.
Way more.
Okay, so let's put on our financial detective hats.
All right.
And look closer at those statements.
Let's dig in.
What should we look for to figure out their financial health?
We'll want to analyze key figures like their net worth.
Net worth.
Which tells us about their overall asset value, and their debt-to-equity ratio.
Debt to equity, okay.
Which shows how much debt they're using to finance operations.
Okay, got it.
These can give us insights into their strategy, their risk tolerance.
So we're going from the big picture to a more detailed analysis.
Exactly. This is where it gets interesting.
All right, ready to dive into those details?
Absolutely. Let's see what story these numbers tell us about IRFC and the future of Indian railways. All right, let's look at these financial statements.
Okay.
Looking at the statement of assets and liabilities, as of December 31st, 2024,
Okay.
their debt-to-equity ratio is 7.81.
Okay, my brain needs a minute.
7.81, yeah. That feels high.
It's a significant number.
Yeah.
In some industries, it might be a red flag.
Right.
But remember, we're talking about a company whose main business is lending money.
Right, for big infrastructure.
Huge projects. Their assets are mostly loans
Okay.
and lease receivables, which are, by nature, debt-based.
So it's different from, say, like a retail company,
Totally different.
where a high debt-to-equity ratio might mean they're in trouble.
Exactly. Context is key here.
Okay.
For IRFC, a higher ratio is kind of expected.
All right.
What matters more is the trend. The trend, okay.
Is it going up steadily?
And if it is?
Then we might need to look closer.
Okay.
But if it's stable or even going down, it probably means they're managing their debt well, given their business.
That makes sense.
Like, if you're a weightlifter, you're going to have more muscle.
Yeah.
than the average person.
Right.
Doesn't mean you're unhealthy.
It's just different.
It's just what you do.
Okay, so we're not panicking about the debt-to-equity ratio yet.
Not yet.
But what about other signs of their financial health?
Sure.
Are there risks we should be aware of?
Well, there are always risks in finance, right?
Of course.
Especially with these big projects and long-term investments.
Yeah.
One thing that stands out is interest rate sensitivity.
Interest rate sensitivity, what's that?
So IRFC borrows money at a certain rate
Mm-hmm.
and lends it out at a higher rate.
To make a profit.
Exactly. That's how lending works.
But I can see where that could get tricky.
Right.
If rates go up.
If interest rates rise a lot,
Yeah.
their borrowing costs increase,
Uh-huh.
but they can't always raise their lending rates as quickly.
So their profits could shrink.
Exactly. It squeezes their margins, impacts profitability.
It's a balancing act
It is, like walking a tightrope.
between borrowing costs and lending rates.
Exactly.
Any other potential problems?
Well, another big one is the creditworthiness of their borrowers.
Mainly the railways, right?
Primarily, yeah.
What if the railways have financial problems?
That could be a problem for IRFC. They might not get their loans back,
Makes sense.
which would hurt their overall financial health.
Right, it's all connected.
It is, like we said.
But let's not get too negative. We talked about the good things, too.
We did.
A high debt-to-equity ratio can also mean they're growing aggressively.
That's true. By using debt strategically,
Mm-hmm.
IRFC can amplify their returns, take on bigger projects.
More profits.
Potentially, which is good for the company and good for developing the railways.
So a calculated risk.
You could say that
That seems to be working out for them, at least so far.
so far so good.
It's fascinating to see how they're handling all of this, balancing risk and reward.
It is. It's a complex game.
Remember that analogy you used?
Oh, about IRFC being a person.
Yeah. If we gave IRFC a financial checkup, what would their health report look like?
If IRFC was a person, I'd say they're ambitious, hardworking,
Okay.
not afraid of some debt to reach their goals,
Mm-hmm.
but they're responsible too,
Yeah.
making sure they can handle those repayments.
Good to hear.
Overall, healthy, but maybe a little sensitive to changes in those interest rates.
So they need to watch their diet.
Their borrowing habits.
Exactly. But they're not, like, starving themselves either.
No, they're making good choices.
Okay.
But gotta stay aware of those risks and adapt if they need to.
Good advice.
That's the key to financial health for companies and for us.
That's a good point.
Even though we're talking about high finance and big projects,
Mm-hmm.
the basics of managing risk and reward apply to everyone.
No matter their financial situation.
Absolutely. Financial literacy is important.
Okay, so we've looked at the numbers,
We have
checked their financial health.
given them that checkup.
But before we finish, I want to bring it back to our listeners.
Sure.
Why should they care about all this?
That's the key question, right?
Even if they're not into finance or infrastructure?
It might seem like a niche topic,
Mm-hmm.
but IRFC's success or even their struggles, it all has a ripple effect.
A ripple effect.
Yeah, beyond those spreadsheets and statements.
So it affects more than just IRFC.
Exactly. They're tied to how the Indian Railways develops,
Right.
which plays a huge role in the economy and people's lives.
It's like those nature documentaries
Laughs.
where a tiny change in one part of the ecosystem can have a huge impact.
Exactly.
So here, a healthy IRFC can mean a stronger transportation system for everyone.
That's right. Think about your last train trip.
Okay.
Was it a smooth ride? Modern train?
I like those.
A clean station? Or maybe it was delayed, crowded.
It's not so fun.
All of that is connected to IRFC somehow. Their funding helps the railways improve things.
The infrastructure.
Yep. Buy new trains, make the whole experience better for passengers.
So more money for IRFC means a better railway for all of us.
Exactly.
But it's not just about passengers, right? What about the economy?
The railways are essential for the Indian economy. They move goods, raw materials all over the country,
Connecting everyone.
connecting businesses and consumers.
If those trains stopped running, even for a bit, the impact would be huge.
It would be enormous.
Yeah.
A strong railway system is crucial for growth.
Okay.
It lowers transportation costs, improves connectivity, and helps trade.
And IRFC makes sure the railways have the money to do all that.
They're a crucial part of it.
So when IRFC does well,
Mm-hmm.
it's good for them, good for the railways, good for the whole country.
It's a win-win-win.
And their diversification, going into coal and wagon leasing,
Right.
that could make this whole system even stronger.
It's like they're building a more resilient network, which helps everyone in the long run.
It's really interesting how finance and infrastructure are so connected.
They are. They impact each other in big ways.
And that brings us to something for our listeners to think about.
A little food for thought.
India needs a lot of infrastructure.
It does.
And it's only going to need more as the population grows and the economy expands.
Exactly.
Will IRFC's current strategy be enough?
That's the question.
What other ways might we see these huge projects funded in the future?
Could there be new models we haven't even thought of yet?
Right, because how we finance things today,
Mm-hmm.
it shapes the future.
It shapes the India of tomorrow.
That's a great point.
It's not just about numbers, it's about investing in the future, building a strong economy for everyone.
And on that note, we'll wrap up our deep dive into IRFC.
The financial engine of Indian railways.
We hope you found it interesting and maybe even inspiring.
Thanks for joining us.
So we've talked a lot about IRFC.
We have a lot of ground covered.
Learned what they do, how they're doing financially.
Even gave them that checkup, remember?
Right. But before we wrap things up,
Mm-hmm.
I want to bring it back to the listener.
Always good to connect back.
Why should anyone care about all this?
The big question.
Even if they're not finance people.
Or infrastructure experts.
Right, like how does this affect everyday life in India?
Well, think about the last time you took a train.
Okay.
Was it a smooth journey?
I hope so.
A modern train? Clean station?
Those are the good ones.
Or was it delayed, crowded?
Not so good.
All of that is connected to IRFC in some way.
Really?
Their lending helps the railways make those improvements,
And for Frank.
buy new trains, improve the whole passenger experience.
So if IRFC has money,
Mm-hmm.
the railways can do more.
Exactly. It means a better system for everyone.
But it goes beyond just travel.
Oh, absolutely.
What about the role of railways in the economy?
Huge role.
I bet.
The railways are like the backbone of India's transportation. Moving goods, materials all over the country.
Connecting everyone.
Businesses, consumers, everything.
If those trains stopped, even for a day or two,
Don't even want to think about it.
right, the impact would be huge.
Massive disruption.
So a strong railway system is crucial for growth.
Absolutely. Lowers costs, improves connectivity, helps trade.
And IRFC is key to making that happen.
They keep the money flowing.
So when they do well, it's good for everyone.
Railways, the country, everyone benefits.
And their diversification strategy with coal and wagon leasing,
Right, those new areas.
it's like they're becoming even more integrated into the system,
It's a smart move, building more resilience, more stability.
especially with the challenges the railways face.
Modernizing, going green, meeting that growing demand.
And that brings us to a final thought for our listeners.
A big one to ponder.
India has huge infrastructure needs,
It does.
and they're only going to get bigger.
Population growth, economic expansion, it all adds up.
Will IRFC's strategy be enough for the future?
Good question.
What other ways could we fund these massive projects?
New models, new ideas, it's all out there.
Because these financial decisions today,
The ones we're talking about,
they shape the future, literally.
they shape India's tomorrow.
So that wraps up our deep dive into IRFC.
The financial powerhouse behind Indian railways.
We hope you learned something.
And maybe even got inspired.
It's not just numbers, it's about real-world impact.
How these choices affect all of us.
Thanks for joining us.